Hello and welcome to Macro Mondays, brought to you by David Gockstein. I'm your host, Landy, and today is July 6th, 2026, and we're looking at Bitcoin to start today. I hope everyone had a wonderful 4th of July weekend for those of us here in the United States and anybody else outside of the United States that does celebrate America's 250th anniversary. And, in this case, we also have a few other things to celebrate. Well, price action for Bitcoin did meet the criteria on Friday. We spoke about this last week, coming off of the lows here. When Bitcoin was, trending down, specifically on Wednesday. I did my Wednesday update, got bought up off of this sweep of 58K. I put out a chart and then also described this on the actual recording for Wednesday was, essentially, if we see the swing low at 58K taken out, we're probably looking at mid to low 50s from there, 54 to 56 by the lower third standard deviation. In this case, it was fairly low around the 55 region, but now has started to curl back up as we went into initial expansion and then mean reversion back to the upside, kind of running the bands from the lower second initial expansion to retest of that lower second, and then right back to the top side here. But the criteria was, look for a trend break. And specifically, I was looking for closes above 61K to go and test 62.5 to 65 as a zone. We then subsequently saw the 62.5 close. And now we've seen, on the high side of the Monday swing, just shy of $65,000. So we have met that initial criteria to the upside. Can it push a little bit more to 65 even? Sure. Can it get above? Sure. What do we need to see, rather? We need to see closes above 65 that can take out this high at 65.5 or so and start working its way back to the top side. Swing just shy of 68 and try to go for that 68 to 70 and possibly more. But in this case, we did have a giant swing down on the Monday candle, sweeping the close open here. The close open that did break the downtrend as well, right around that 61.5 region with a low coming in at 61,280. So, nice buyback. Now we need to see continuation to the upside. And if we do see moves back down, you want to see closes remaining above this swing low now at 61,281 and preferably above 62.5. So let's actually go ahead and take a look at the zones of interest real quick here, as we have had, primarily most of the criteria for this move has played out to this point. So now it's about defining some continuation to the upside and where this might fail. So back to the upside here, closes above 65 give the bulls a chance to run, if we didn't already see it running, to the actual high at 65, 560, 570 area. And anywhere above there, then we can start looking back to the next high, just right around that 67 2 area, 67.3 area. If we did start to see closes above the upper second that start running this area, that opens up 68 to 69K and then up to 70, the bottom side of this weekly over here. And 70 to 72 is kind of the main area overhead if we did start seeing any kind of recovery of $68,000. So, what would that look like, though? That would look like Bitcoin essentially holding structure. You wouldn't really want to see it dropping this low, and any kind of closes below 62.5, not going to look great, because then it's going to look like Bitcoin wants to run this low and potentially back down for a retest of $60,000, which is fine, right? We have higher highs and we can potentially look at higher low structure in and around there. But just know that for this particular move up, what the criteria is. So, we could be looking at something that ends up like that, right? That could be in play, but we also would have to then entertain that if we start seeing it break down further towards the low here, without putting in a higher low or potentially just going into a sideways consolidation, these are things that we would have to be aware of, something like this that then starts to trend back down, right? So there's going to be a few things to pay attention to, but it's all going to be borne upon what is the continuation for where the next high is coming in. And realistically, you want to see close above 65 that can run the 65 and a half essentially to the next high, somewhere around, the 67 to 68 up here. That would give Bitcoin good distance for a correction into higher low fashion. Or if we see a local correction here in lower term timeframes, you really do want to see it remaining above 62 and a half. You start seeing that dropped, then we have to pay attention to this wick. 62 to 62 and a half is a safe swing zone down below, but if it starts pushing any further, that swing low could get taken out and cause a cascade back to the support at 58 to 60. So that's just something that I would be watching here. Momentum still looks good. The bullish control zone, what are we looking at for bullish control zone? I'm curious, 67K. So essentially same areas that we were looking at. So above 65, really looking somewhere around this high, 66.3 to right around 67.3. And realistically, if we were to see Bitcoin get above the upper second standard deviation, that would put Bitcoin above the 65 and a half, 560 area. And we'd be looking for expansion into this high over here and potentially up to that 68 and maybe even more to that 70 to 72. I don't really feel that confident that I'd be looking at it right from here right now. So I would definitely pay attention to the setup as it develops. Doesn't mean that it can't happen, but I would be watching the 62 and a half to 62 and under towards the Monday low to see if that actually gets run or dropped in the coming sessions. So the Tuesday, Wednesday session, especially before I talk to you again on Wednesday evening. So definitely something to pay attention to. And then for the local structure here on the weekly, this is one continuous move down. I know that some are looking at that 67, 2 to 3 high here on the weekly. And, it doesn't mean a lot. What I would pay attention to is a low being set above the 65.7 area where the close open came in here that set that, because this would just become a low. And then, of course, then we could entertain any kind of moves back up into the low 70s or, 68 to 70 and potentially more to 72 above that basis band, starting to work its way towards the 74 to 75 up here by the upper first. But I'd be very wary, right? Doesn't mean that it couldn't happen. We'd need to just track daily structure. And then, of course, as I've mentioned before, any kind of closes above 82.8 on the weekly, start staring at that monthly very, very closely. If that did occur after a low being set, and the low is not set. This is not a low set. So a low for me here would have to come in above around 65 and a half, almost $66,000. Then the low would be set. And then we can start looking at mean reversion. And then if it does start to encroach on the 80K region, then we can go, hey, that's interesting because we could get a trend break, on the monthly, because that is a monthly lower high. Yes, it's a weekly higher high to lower low structure, but that would be a monthly lower high getting taken out if we started to see, price develop into, in towards the end of the month that got a close above there. That would be very, very interesting, because then it would start to point towards this area, or, even if it did dip down into the mid 50s or even low 50s, but hold this area, subsequently, we'd have to start evaluating what long-term structure would really start to look like or shape up. Honestly, I might have to walk that back actually, because if it were to do anything like this, you wouldn't want to see the lows taken out again. You'd want to see it consolidating higher to get a structural shift in the context of the monthly, get the bands nice and squeezed together, and then march back to the upside, later this year, early next year. So, or else, take that leg lower sooner rather than later, which means that this is not the low side structure that you'd be looking for, and it's not a low set anyway. And even if it does set here, it is a lower low. So just keep that in mind. But that doesn't rule out further moves back to the upside into the upper 60s from here if we do see a low set. So this week is going to be an important week to watch to kind of make that determination on what it is that we're looking for in the coming weeks. So, all right, let's go ahead and turn all this mess of lines off. Let's go check on oil. And I'm going to tell you what, in an ideal world, between oil and Dixie, what you would want to see in this changing world that we have here. I mentioned that, this is a key area for oil, right? We're right at the top side of a long-term structure here where we saw no closes below. We saw a nice sweep of $55 per barrel for WTI. We saw a big old structure break to the upside. So this is a downtrend break off of equal lows, essentially equal lows with a nice sweep. So then you have a structure break, and just be careful of this 68. On the daily, nice little dip in and kind of holding that 68 level, dip below it. Beware of 71 to essentially 75 or so where the basis band is. If it starts to recover above there, then we're looking for, essentially 76 to 78 as the primary zone of resistance overhead. And then beware of any kind of moves above there into the low 80s where the upper first is starting to come in. If we see that and Dixie starts to rebound and reclaim back to the upside, if we see strength off the lows for oil and we see Dixie pop back up into this zone, which I've mentioned, towards the basis band, we've gotten a couple of strikes at it now coming into the Friday session and a rejection of 101. You really want to see what, in an ideal world, if oil does head up, you'd want to see Dixie in an ideal world. This is not typically what happens. Typically, if oil bounces, Dixie's probably going to bounce, right? They're typically correlated. They've been uncorrelated for a little while now, which is part of the perks of the United States being, the main player when it comes to exporting oil these days, the number one producer and all that good stuff, and then also having the world's reserve currency, well, at least for Western nations. And in this case, when we're seeing them play uncorrelated, you'd almost want to see Dixie come down, although that would indicate a few things that you wouldn't want to see in the economy. But if oil remains low and Dixie continues to remain strong, that's pretty strong deflationary pressures in the United States, which of course everyone equates with slowdown, but this also would give the Fed the latitude and Warsh the latitude to do the cuts that he talked about. So, but if you want to see a more robust risk environment, you want to see Dixie come down and oil continue to plumb into that big monthly area between essentially 57, 58, and 68. And if it does bounce back up, you want to see Dixie staying, below the 102 to the next big level at 103, because things are looking odd if we start seeing it breach that while oil bounces, if it does. So just keep a close eye on it. We are in an ever-changing world, and if we do see a world in which we have lower oil costs or energy costs and stronger dollars here in the United States, yeah, it's not great for the trade side of things, but a lot of those deals were already signed with specific agreements in place for what is going to be traded and how much. It would be an interesting set of circumstances that would allow Warsh to see deflationary pressures in terms of prices, right, by having energy costs down and then having a strengthened dollar, would create an environment where cutting would be very attractive. So freeing up liquidity would be something interesting coming in towards the end of the year if we continue to see Dixie remain strong. I would say probably above $98. And we'll see kind of how that goes. It is worth tracking. In the traditional markets, SPY regained the high over here, and it did not close above the Thursday high, which I do find interesting. So the Thursday high was going to be 751.31. So do beware, because this is getting the compression that I talked about. This is exactly the structure that I was referring to when we first broke structure, right? And even if we do see a move above the 756 in the upper second, beware of 760 to 765, because this would push the upper third towards 765. And just beware that if we do go into a sideways consolidation to compression, that we can do something like this where we get trending structure that, that breaks down, and then we get a higher high, higher low, and we chop around and compress at the highs that then gets ready to dump off later. So just beware of that. We would need to see close over close price momentum above, I would say 765 to initiate the next move. And beware of any moves below the low here at around 715 that start moving back down towards the 695 to 700 high side structure over here. Because if we start to initiate that type of a correction, we're probably going for more, potentially down to 680, 685 here, bottom side of this range, in for a gap fill even down to 660, 670. So just beware of a correction like that. And from the highs, that would be not unexpected, by the way. I think many are actually looking at a scenario like this where we would get something like a 10% correction, which would be a perfect gap fill. And, but for right now, short side, they get blown out a little bit. We're starting to see a lot of talk about about various credit default swap spreads blowing out and all that kind of stuff. That was kind of like late last week into the weekend, kind of a lot of the talk online. And honestly, sure, yeah, okay, a couple companies, we're starting to see it take off a bit. Essentially with that's essentially insurance for potential downside or not meeting obligations, debt obligations for certain companies. And we're not at that fever pitch. And in fact, the spread is not, although it accelerated quickly, it is not where it is like, oh my God, we need to run around with our hair on fire like I saw on the timelines. So just understand that some of that's a little social media overblown clickbait headline stuff. But, we are seeing on the charts the potential for a larger correction in markets starting to form if we don't see, SPY continue 765 and above on daily closes to initiate the next move up. One of the things that I've said quite a bit is, pay attention to Dow. What we're seeing more than ever is internal market rotations for risk. And we're seeing Dow continue to head up. We're seeing Dow continue to hold structure, and we've seen the internal market rotation in terms of risk. And now it's about evaluating if we get more of a risk off approach to the trades, right? And that would be a scenario where I could see oil bouncing and dollar getting a nice bounce as well at the same time, causing a risk off rotation. But we're not there yet. And the trend continues for Dow. And we're not there in terms of developed structure just yet. Yes, it is lower low, lower high structure as it stands right now, with a little bit of a bear bait swing, with a higher low close. So it really is all about seeing continuation above that upper second, 755, 756, taking out 760 to 765 and marching on. So that's what I would be watching for something like SPY. And if we do see a dollar continue to head down, and let's say we see oil head down at the same time, I think that we see a more attractive risk environment that might bode well for cryptocurrencies as well, being as far out on the risk curve as they are. So that's pretty much all I got for you today. I hope that I described my thoughts accurately. And if I didn't, let me know. If you have any questions in the comments, please like and share this out there. It really does help. Get the message out. All of my information is always free. I get contacted by a lot of different platforms, and I'm a fan of some of these platforms as well. Big fan. that are like, hey, do you want to like produce content for these platforms and you can make money on your content and stuff like that. And I put it out there for free because I didn't want to gate it. And I have no problem with other people doing it. I've done it in the past where I've been part of different content platforms and teaching platforms where I've sold courses, and I've done all kinds of different paid updates and stuff like that. But I really want this information to hit as wide of an audience as possible, because it's in times like this when you want to be here in the cryptocurrency markets, in this high risk environment with high risk assets that are very risk sensitive to risk rotations within markets. And being in a bear market, this is the time when you want to be here to identify opportunity, like in Bitcoin and cryptocurrencies, so that you can pick you can pick up the things in the bear markets at a discount, so that you can realize that profit, and you can sit back when the bull market comes and you can have some fun and take some profits and potentially realize life-changing wealth opportunities, right? So, my content is always free, and it's going to remain free unless something changes. And I really do appreciate everybody that does like and share this stuff out there. I appreciate you all very much for interacting with the content, coming to the spaces, obviously watching David's show where I often go on, that's, Monday through Friday. Sometimes I show up on Rob's show. Obviously that's a little bit different, a little bit more politics focused, but I really do appreciate all of the support, and I wanted to thank you. And I wanted to wish you a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.